dear students and working accountants. Welcome to my Smart Tally Prime YouTube channel. My name is Babu Rao from Hyderabad. Today, before entering into our topic today, in advice to you, I have already advising in every video. That is, if you want to learn Tally Prime with GST, PDS, TCS, everything perfectly, getting expert knowledge and become expert accountant, please follow all my videos and practice in the same order, that is in the same serial wise order I uploaded, all the number wise. You follow that and practice well, you will get very good knowledge and become expert accountants. And everyone visiting my video, please don't forget to subscribe to my channel if you have not already done. Only once you can subscribe. And then click the bell icon and select all so that you get notification for all the videos which I upload in the channel. Okay. And then share my channel Smart Tally Prime with all your friends or anyone who want to learn all these Tally Prime, GST, TDS, TCS, everything. So you please share with them. And then on all the videos, please watch till the end. Don't skip in the middle, because if you take a topic, so everything will be explained about the topic, and then we will go to the practical part, how to work on the Tally Prime with that. So if you skip in the middle, you will learn only you will hear only the practical, learn theory part, and then practical work on the Tally Prime you will miss. So don't miss this. So view the video till the end, and after viewing the full video, you please like my video if the video is good. And then in the bottom, in the comment section, you please don't forget to post your comment about this video. So don't forget that. And then I already uploaded videos in the last 2 days, that I am starting this channel, and the videos, everything is completely free forever. At any number of times you can view and you can learn very well, no problem, completely free. But in addition to this, I am taking the online classes also, only online classes, not offline. Online classes also, but they are not free, they are paid. So if anyone is interested to join the online classes and learn, please send your details like the name, qualification, place, what you do, all these details to me, and I will send it to me, and I will call to you, and I will give the date. So next batch I am starting on 3rd of this month, that is 3rd of July, that is on Monday. So from Monday I am starting a new batch. So please send your details and register your names, and the previous day, that is on Sunday, I will say there is the day before the starting of the classes, I will send you the link to join the classes. You can join the class and learn well. Okay. My contact details are given on the video, that is the thumbnail of the previous videos. On the thumbnail I give the WhatsApp number, and that also given in my about section in the channel also. So you can take that, and you can send your details through my email, or you can send through only WhatsApp message all your details. Okay. And then I will call you, and on 3rd I am starting the batch. Okay. Now we will enter the subject. So today our topic is payroll management in Tally Prime, or salaries processing Part-2. So already Part-1 is completed, and now I am taking the Part-2. In the Part-1, everything we learned, how enabling the company affluent company features, how to enable the payroll, and then how to create the category. I have to create the employee category, and the employee groups, and the employee details, and the individual. All these are called as masters. So employee category master, employee groups masters, and employee details means employee masters, and units of work, how the working of the employees, that is how they work, months, days, as well as for overtime, hours, minutes, all these are called units. But the month and days will be there by default, just like cash and profit and loss account. Those two units will be there by default. We need that create. We have to create only the other one, that is minutes and hours, minutes like that. And then after that, production type, that is units. And after that, how you will do them, that on the basis of attendance or on the how will you pay them on the basis of attendance, on the basis of overtime. All these are called that attendance or production type. That is we created already. We learned how to create that. And then pay heads. Pay heads means related to the payments to the employees. So in this case, payment head payments means not only payments to the employees, whatever we are paying to the employee, but also we make some deductions from the employee's salary. So those deductions are also called, they are also called pay heads only. So the pay heads related to the payments to the employees are called, they are called as payment or earning to the employee. So they are called as deduction, pay heads of creation. These are all called BA. They are called as earning to the employees. So they are called as earning pay heads or payment pay heads. So earning pay heads, and then deductions also we will make. They are also called as pay heads only. But in deduction there are two types. One is deduction, that means statutory deductions as well as employer contribution. Deductions from the general deductions from the employee, and also while deducting the some items from the salary of the employee, the employer also will contribute the equal amount or some amount towards that amount, towards the employee's deduction. The total amount will be paid to the government. They are called as employer's contribution. The employee deduction will be made from the employee. They are called as deduction pay heads. So the first one is earning pay heads, that we completed in the last one. We created the earning or payment to the employees. Earning pay heads we completed. You see the tally. So go to alter. I will show you how to go. So in this case, we go to pay heads. We created all. So these are all earnings to the employee. So earning pay heads we created. Now deduction pay heads we have to go. Deduction pay heads and deduction pay heads deducting from the employee. They are called as deduction pay heads, and some amount will be contributed by the employer towards the statutory obligations. They are called as employer contribution pay heads. So these two we have to do now. So they are called as deduction pay heads and employer contribution pay heads. That's what we have to do. How to do? Then all are pay head only under the heading. The pay heads only we have to create earning pay heads, deduction pay heads, employer contribution pay heads. So we completed the earning pay heads. In this case, there is one small this one. In this case, when you are creating in the problem I gave, see here in the problem. So I have given that I showed all these things how to make this earning pay heads, and then in the deduction I will tell you yesterday. In the deduction, here I show you. Okay. Salary advance. Okay, we will take today. Okay, this one we will take. Okay, now deduction pay heads. How to make the deduction pay heads and how to create the deduction pay heads. Okay, so go to create. See here, any pay head or anything when you are creating, you can go to create button and go and select that particular one. Particular one we can create only. We can only create. That's all. But if you go to not create, if you go to alter button, the same thing, you can go to the same item required. So we are going to pay heads. So if you go through alter button, if you go, we can see all the ledgers, all the masters already created, you can see. So you can see all the masters created, and whatever you want to create now again, then you go to the upper one on the top, create. So you can go here and we can create here. So that before creating, we can see whatever is pay heads means whatever masters are created, we can understand. So we can see them, and whatever is required, now we can create. That's why always better to use alter button only. Alter button, ledger are creating. You go to ledger, all the ledgers you can see. Similarly, we are going to pay heads. So all the pay heads we can see. Okay, now we are going to create button and we will create the pay heads. That is the deduction pay heads. So in this deduction pay heads, in the last video, I already did this one. in the pay heads, see, in the pay heads, so canteen deduction one amount is there. This canteen deduction is the expenses towards the canteen. They'll do some tickets or they'll do free food and they'll do the food, serve the food, and at the end of the month, they will deduct some amount towards the canteen amount, canteen expenses. So that I already created. So canteen deduction. So we'll go to canteen deduction. And here, previous all these other items, see, all these are earnings only. So we have taken them as, see here, earning for employee. All these are earnings for the employee. We have taken them as earnings for employee. But here, this one is canteen deduction is we are deducting from the employee. We are deducting from the employee. So in these deductions are called two types, are in two types. That is, one is general deductions. That means the employer will deduct and keep the money with him. He will deduct and he will keep the money with him. He will not pay to anyone. Another one is statutory deduction. According to the statute or law, he has to deduct some money from the employee and he has to contribute some more money, and total amount he has to pay to the government. So it is against according to the statute. That statutory obligation is done. So statutory deductions and general deduction. General deduction is deducted by the employee, kept with him. Okay, that's why there are three. I gave some examples. Canteen, salary advance loan. Is salary advance loan not required? In our problem, it's not there, but I will tell you. So canteen, we did. How you will do? Canteen deduction. See, deduction from employee. Okay, that is general deduction, and that amount will be deducted, kept by the one employer itself. That's why it is only, when you are paying, it is called expense. The indirect expenses we are taking, indirect expenses we took. Okay, now we are taking it as indirect income because you will deduct and you will keep with them. Indirect income, net effect salary, yes, that is shown in the pay slip as canteen deduction. And here it is not a fixed amount because what is the amount to be deducted? That is depends on the employer. Every month it will be changing. That's why it's called as for that month. What is the amount to be deducted as canteen deduction? That is called as user defined. The user, we have to give the money. I mean, we have to give the amount, how much to deduct. Okay, that's called user defined, means the employer will give the amount. What is the amount to be given? So that will take. So that is done. And the next one, I also actually told a small correction. This salary advance. Next one is salary advance. If you go see here, salary advance. So we are deducting salary advance. So selecting salary advance. Here I told you. So deduction from employee and take as indirect income this also, but not this. So in this case, so here actually it is not deduction from employee only, deducting from employee, but it will not be shown as deduction from, see, for example, bonus. It is also earning. So we are not showing it as earning for employee. We are showing it as separate head bonus, like that. Here, you will not show it as, it is deduction only. It will be shown in the pay slip as deduction. But we will show it as, not as deduction, but as loans and advances, because when you give the advance to him, we enter under loans and advances. Whenever you recover something, that will be adjusted against that. That's why it's called as loans and advance. Canteen deduction. So we already spent towards canteen expenses, and when we are recovering, we recover and keep it with us. That's only expenditure. Against the expense, we are getting income. But here, we are giving loan or advance. So that will be entered in under loans and advances in the book. So against that, we are deducting now. So we will take it as loans and advances, and the head is not income. It is as loans and advances. Against the loan and salary advance, we entered in loans and advance account. So that will be now cleared. That will be adjusted. So you take it as simple. So all of the things are, this is also how much to deduct against this one. This is also the same thing. You will take it as user defined. So this is the thing to be done. But in our exercise, in our assignment, it is not there, but I am showing this. So this is one. And another one again, advance, I mean loan, some loan given to employee. So it may be general loan, education loan for the children, education loan, housing loan, whatever it may be, that we will write loan deduction. Loan deduction, that is education loan deduction or housing loan deduction or some festival loan, something. Loan, this is also not deducted from employee. This is also not shown as deduction from employee. This is also giving loan or advance, whatever it may be. It is also taken as loans and advances. And here, The head is, here the head is loans and advances you have to take. Pay head type, and then under loans and advances asset that you have to take. So yes, direction and user defined how much loan. So if it is for some certain period, for 1 year or 2 years, and every month amount is fixed, then you can take it as flat rate. You can take it as flat rate. Otherwise, in the loan amounts, one month you will deduct more, 1 month you will deduct less. Sometime 1 month you will not deduct at all, depending on the request of the employee. In such cases, that what is to be deducted, you take it as user defined. In the case of loan or in the case of salary advance also, we can take it as user defined, or sometimes if it is fixed amount, suppose I gave advance to salary employee, salary against salary, I gave some advance. So I told him so in 6 months, every month fixed amount, or 10 months, 10% every month. You clear the advance, we will deduct in 10 months. So fixed. In such a case, we can take it as flat rate, and every month we will deduct flat rate every month. Or if you, that's not there, so whatever you want, you can deduct every month. In such case, we will take it as user defined. Both loan deduction as well as salary advance. If the period is fixed and the amount is fixed, we can take it as so flat rate. So what is the amount? Flat amount, we will give that. Otherwise, it's not decided, means whatever we want, we can deduct. In such case, user defined value in both the cases. Okay, so that's one. Okay, now this is the general deductions developed, deductions made by the employee, but employer from the employee salary, and the amount is kept with the employer. So that is why they are called as general deductions. And others, as per the rules of the government rules, we have to deduct some amounts from the salary of the employees. So they are called as statutory deductions. What are the statutory deductions? Everything. See here. Now we'll go to creation. So first one is employees provident fund deduction 12%. Employees from the salary of the employee, we have to deduct provident fund at the rate of 12%. So it's called as employee EPF. It is called EPF deduction. Deduction at the rate of 12%. So employee EPF deduction at the rate of 12%. So this is deduction from employee. In the previous case, we took as deduction from employee. Now it is as per the statutory obligation we are deducting. It is called employees statutory deduction. So that is called as employees statutory deduction. And when you are deducting and paying to the government, we have to pay in some particular accounts of the government. So the account numbers are given here for this EPF, given as C, PF account number 1. So PF account number 1 we have to take, and it is under liabilities, current liability, not income or expense. Deducting, we have to pay to the government. So that is the liability of the employer. That's taken as current liabilities, and it will affect net salary. Deducting from salary, so it will affect the net salary. How it is shown in the employees pay-in slip? It is shown in the like this, or simply EPF at 12%, or provident fund deduction, the provident fund at 12% we can give, or the same name, it will display the same name. If you want to change it, you can take just simply PF 12% or EPF 12%, or total thing, anything you can show. Okay, and then here already see here, from here it is going directly to the rounding section. Calculation type and the period is not, by default it is computed value. We have to compute it definitely, because the 12% is to be computed on the salary. So that is one. It is not taking and going directly to rounding method. Take normal rounding, one limit, and here we are calculate. So go to specified formula. In the specified formula, I told you already, all the deductions, whenever you want to make deduction on basic pay. Basic pay means basic plus DA, not only basic. Basic means basic plus DA. If there is no DA, then only basic amount. So here we have basic pay is there, and it is the, see here, if you go to specified formula, if any calculations are we made, we have to take this specified formula. Then you take what are the heads to be taken. Basic pay, one head, and then next one go down. Add pay head, add another one. Add pay head. Next one we can take dearness allowance. Only these two. That's all. So only these two. So first May we are taking 1st May 23. And here for this provident fund, there is a limit. The percentage you have to give, but what the percentage of there is a limit. See, actually, this EPF deduction will be made from the employee at the rate of 12% up to 15,000 rupees salary only. One more thing I forgot to tell you. One more thing is here. When you are making the deductions, this employee provident fund deduction that is to be made, if there are 20 or more employees, it is mandatory. Definitely, surely, we have to register the employees under the provident fund scheme, and we have to make the deduction at the rate of 12% if there are 20 or more employees. Suppose if there are less than 20, in such a case, it is not compulsory or mandatory, but voluntarily the employer and the employee, if they agree, so they can register and they can make the deduction. In such a case, they can make 12%, but in such a case, 10% is enough. If less than 20 employees, it is only voluntary, it is not mandatory, optional. If they don't want, they need not deduct anything. If they want to deduct, they can deduct voluntarily, but 10% is enough. If it is 20 or more, the rate is definitely 12% and deduction is mandatory. Okay, and now here, and that deduction also is limited to 15,000 rupees. So above 15,000 rupees, you need not make any deduction. So see here, amount up to 15,000. Sometimes you will give percentage, sometimes you will give not percentage, you will give amount. This much of professional tax, 100 rupees like that. So in such a case, you have select value. Here it is percentage. Take percentage. What is the percentage? 12%. Just you give 12% because we are given percentage here, it will take percentage. And above 15,000 rupees, what is the amount? So limit is 15,000. So 15,000 is the limit. 12% is 1,800. So if our salary is maximum 15,000, the maximum deduction will be 50 up to 15,000 only. That is 1,800. So if the salary is more than 15,000, that will not be deducted as percentage. It will be deducted as at the maximum amount 1,800. So take value 1,800. You see, up to 15,000, 14, 10, 12, whatever it may be, 12% will be calculated. If the salary is more than 15, so above 15, it will not be deducted. So up to 15, that is greater than 15 means only the maximum amount is 1,800. That is 15,000 into 12% is 1,800. So if it is 10,000 salary, so 12% is 1,200 rupees will be deducted. If it is more than 15,000, maximum is 15,000, only 1,800 rupees is deducted. There is some monetary limit calculation. This is the EFF deduction. And then an employee, they have to pay some amount towards the ESI, employees state insurance. This is meant for only small employees with less salary. It is meant the government to take care of their medical needs and all these things through the ESI, hospitals and dispensaries, they will take care. That is why for that we have to make something, and the limit is 21,000 rupees. If the employee's salary, that I will tell you what is meant by salary, what are the pay heads to be taken. If it is more than 21,000, this will not be, government will not help, will not give any medical attendance, medical assistance or medical treatment, it will not give. Only up to 21,000, that means they are salary employees with less salary. If it is more than 21,000 means that those employees are not eligible. Okay, but if the number of persons is, if any number minimum 10 persons are there, we have to apply this ESI deduction. Minimum 10 persons. Even less than 10 persons also they can apply. But if there are minimum 10, it is mandatory to deduct this is ESI deduction I have to make. It is now. And here, so we take this employee ESI deduction. So here, what is the rate? Here, total amount is 4%. Total amount is 4%. In that, the employee has to, the employee salary, the deduction from the employee will be only 0.75%. Only 0.75%. Balance will be paid by the employer. That is 3.25%. will be paid by the employer. So you will, in the case of Provident Fund, both will be saved. But in the case of ESI, employee will be liable to pay only 0.75%, that is the deduction made. And here, there is one small thing, even that is up to 21,000 salary. Above 21, it will not take. Even if you give in the salary head, in the pay head, it will not deduct. Okay. Here, this 0.75 is the eligible liability for the employee from the salary. But if the salary of the employee, that is average daily salary, that is total salary divided by 30 days or 31 days. The average daily salary is up to 176 rupees. That is not more than 176. So it is not crossing 176. So up to 176 rupees, if the salary is, and then he is not liable to pay any ESI. That is, no deduction will be made from the employee's salary. So up to 176 per day, that is daily average daily wages, means daily salary is up to 176. So there no deduction will be made from the employee. Only employer will pay his share 3.25%. Employee, no deduction will be made from employee. That means around 5,200 rupees or something. If the salary is up to around 5,200, then no deduction for ESI. And above that, it will be deducted at 0.75%. Okay. So this is the thing. Or as employees, this one, limit is 21,000 rupees. This is a salary limit. So here, then come here. This is also according to the statutory obligation, we are deducting. So this is also called employees statutory deductions. Employees statutory deductions. What is the head? So for PF, it is taken as PF account number 1. For ESI, it is given employee status separately given. Take that one. And this is also current liability. All these deductions are made from the employee and to be paid to the government. So it is a liability to the employer. Liabilities, it is affecting salary. Yes, it will affect. And it is shown in the pay slip. And then here also it is not taking. So you have to compute that amount. That's why it's not going to that. Because it is directly going to rounding table. So normal rounding. One we will take. Here also we have to take special formula. That is specified formula. What are the heads to be taken? All the heads will be taken except some heads which are not paid regularly. And which is paid when sometimes only it is paid. That is bonus. It will not be paid regularly. And sometimes it will be paid only once a year like that. And also medical expenses. Medical expenses means medical reimbursement. Medical expenses, I told you already. Medical expenses means reimbursement. If the employee pays the expenses and submits the bill, the employer will reimburse that is written the amount, medical reimbursement. So that's only one, sometimes only it's not regular. So these we should not take, and all others we will take up. So here, basic pay, again, come down, add pay head, then dearness allowance, and then add pay head, then house rent allowance, then again add pay head, then canteen, that is deduction, conveyance allowance, then add pay head, then come to overtime, and add pay head, come to variable pay. That variable pay also will be paid, but that variable pay it is not better to take, because variable pay, it will pay every month, something will be paid. So all these things will take up, and 1/4/23 we are taking the date. And here there is no monetary limit. Amount, there is no limit of the salary, total amount. In this case, our liability is only 0.75%. This is the liability of the employee. That is from the employee's salary that is to be deducted. Okay. Now, then next one is professional tax. So this is the tax paid by all the employees, anybody employed, employees as well as service providers. That is self-employment or something. Service provider, so lawyers, that is advocates, chartered auditors, consultants, all these people, they are also earning. They are not getting salary, but they are professionals. All the professionals as well as employees, it is to be paid professional tax. But for this, there is no fixed percentage, not calculated as a percentage. Depending on the limit, it will be calculated and it will be deducting amount, not percentage. So that one you have to take. And professional tax, this is also as per law. So here, employees statutory deductions. Here, And this is professional tax. For this also, separate head, professional tax head is given. That is to be taken. And remember one thing, for ESI, fraud fund, employer also will make some contribution. But for professional tax, it is payable by the employee only. The employer will not reimburse or it will not, contribute anything. Only liability of employee. So here, some registration number, we must have registration number that will take up. And this is also current liability deducted and paid to the government. And it will affect the salary, yes. Professional tax is shown. Here also, computed value, it is not. Computed value is by default, it is taking months, it will take normal rounding. And here, the professional tax, this one limit, and in this professional tax, and the current earnings we will take. Current earnings, it will take the current earnings. All the current earnings means any salary, if you go in this month, if you give some special allowance, not paid every month, even that this year month income, depending on income, you have to pay. Suppose that's why you have to take it as current earnings total, all the earnings. So current earnings total 1523 we will take, and here professional tax, it is paid not as percentage, as value. That is some amount will be paid, but as per the government, this tax is payable to the state government, that is municipality or the corporation of the things. And there is limit as per the latest rates in the Telugu states, in Andhra Pradesh and Telangana. It is up to 15,000 rupees value, not percentage. Value is nil. No professional tax up to 15,000. 15,000 to 20,000, the value, that is amount will be 150 rupees. And 20,000 and above. So up to, we need not give anything. So up to means 20 and above is above infinite, any amount. Value. Okay, value. It is 200 rupees. See here. So up to 15, no salary. No professional tax. 15 to 20,000, it is 150. Above 20,000, it is 200 rupees. Previously, the limit was only up to 10. So up to 10, there was no tax. 10 to 15, it was 100. 15 to 20 to 150. 20 and above 20 is okay. So that slab is, that 10,000 to 15,000, the slab is removed. So up to 15, no professional tax. 15 to 20, 150, and 20,000 and above, 200. This is and in addition to this, there is one more thing is there, a professional tax. And then after that, NPS, there is one pension scheme, central government. This is, we already know in the state, under the PF Act, there is one pension scheme. In addition to this, that the central government introduced another one, national pension scheme. For that, the contribution is 100 remain. 10% is the contribution, but it is optional. That is, it can be contributed. If you contribute, the employers will contribute. Okay. But if both contribute, both will take up. Optional. So if the employer says, I will not pay, so the employer also will not pay. Okay. So it is only optional. For example, we are taking it as they are accepting. Okay. So here, employee NPS, that is National Pension Scheme. Pension is deduction at the rate of, and here there are, what I will tell you, NPS. Here there are two types, Tier 1, Tier 2. Tier 1 deduction. I will tell you the difference. Deduction at 10%. Tier 1 deduction at 10%. This is also statutory deduction. So employees statutory deduction, and it is called as the National Pension Scheme. Tier 1, Tier 2. The difference is Tier 1 means the amount after 10 years, till 10 years, we cannot withdraw anything. After 10 years, you can withdraw 25% of the amount available in the scheme. That is Tier 1. Tier 2 means there are no restrictions. You can withdraw part or full amount at any time you want. So that is called Tier 2. But they generally, every employer, they opt for Tier 1 only. We are taking Tier 1 only. So National Pension Scheme, Tier 1. And it is also current liability payable to government, direct and payable. And it will affect the salary. And this is shown in the salary slip. And it is computed value here. It is giving us computed value. We have to calculate the amount. So computed value, and you take normal rounding, and normal rounding limit is 1. If you go there, computed value here, we will take specified formula. In this case, this NPS also, just like fraud and discount, only basic means basic plus DA. Basic, then add bracket, go to DA, dearness allowance. So only these two, and in these two, 1,523 effective from, and here there is no limit here. Percentage is 10%. Percentage is 10%. So this is accepted. And then income tax and gratuity. Then we will take up gratuity. Gratuity is not actually deducted from the employee. It is not paid by the employer also. It is only making provision that every employee will be eligible to get the gratuity if they work for a minimum of 5 years. Then only so for that purpose, every year some provision will be made by the employer. If they work for 5 years or more, then we have to pay this much. That's only making a provision. If they does not work, they will not pay. If they work, they will pay. That time after 5 years. That's why this is called as, see, separate head is given for this gratuity. Automatically it will calculate gratuity. And here, for calculating the gratuity, every month, number of working days will be taken as 26 days. Only 20. That is whatever your salary you get. It is not for 30 days. It is taken as 26 days. For example, your salary is 25,000. It will be taken as divided by 26 or 961. It will be taken as 961. That is per day. That is for 26 days. This is the salary. Okay. So that's why here gratuity. Here you have to give 26 days. Number of days, gratuity days of a month, 26, and up to 5 years, nothing will be paid. So 0 to 60, the number of days. See, after that, when you work more than 5 years, for every year of service, we will get 15 days salary. That is, 15 days means total salary, monthly salary divided by 26. In that way, it will be calculated. You will get for 1 day. So here, 25,000 I told you, 25,000 divided by 26. This is per day into 15 days. So per month, 14,423 will be paid. That is for 15 days. So it will be calculated like that. So that is called as eligibility days for gratuity calculation per year. Per year, how many days gratuity will be calculated? Up to 60 days, 60 months, there will be no gratuity. 61 and above, then and above. So there is the limit is, that is 15 days. So per annum, that is per year, 15 days salary will be taken, calculating at 26 days. So 25 days divided by 26 days into 15 days, that means 14,423 per year. If I work for 7 years, so I get for 7 years, 1,962 rupees is the amount. So that is the thing you get for 15 days. Some people they give as 61 to 120, 15 days, 120 and above also again 15 days. It's all waste. So it's not like that. Simply you take here up to 120 days, up to unlimited, up to no limit. So you take 15 days, that's all. Okay. And this is also, this is not a current liability because not payable to the government immediately, not our employee. It will be paid only after 5 years if you work. That is called, it is all provision. Provision also is on current liability only. Provision is made to pay this one. Every year provision will be made and payable if you work out more than 5 years. And then, so income tax details. So here, income tax details have to take. In some cases, income tax details are there for earnings. So here, automatically it is giving gratuity head is giving an actual value calculate and no deduction of CGST. And rounding, normal rounding, limit is 1. So this is gratuity. And then another income tax. Income tax. So income tax. So for this, it is given as, see, for income tax, it is here. It is also statutory deduction from the employee. Statutory deduction from the it is employee. Deduction from the employee. Deduction from the employee and income tax is separate. Head is given. And this is also liability because we will deduct the income tax and we pay to the government. And then it will affect the salary. Yes. And it is shown as income tax. And as per the slab rates of that year, every year slab rates will be changing for income tax. So as per the slab rates, the amount will be calculated automatically. And here months only, and the limit is already, it's upward rounding. It is taking as in the case of income tax, it will take upward rounding. 50 paisa, even though 15 paisa, 20 paisa, it will go to the next higher rupee. So automatically it is taking upward running 1 rupee. So these are the deductions. Gratuity is not a deduction, it is only a provision. All others are deductions from the employee. Okay, so your income is more than the exempted limit, then only income tax will be deducted. Otherwise, there will be no income tax. Okay, these are called general, deduction payheads, deducting from the employee's salary. And now, some cases, the employer has to contribute some amount towards the statutory obligation that is deducted from the employee, and some amount added by the employer. Total amount is paid to the government. They are called as employer contribution. They are also payheads. All this that are paid to an employee, deducted from the employee, given by the employer, everything they are called as payheads. So first one, earning payheads, deduction payheads, then employer contribution payheads. Now in this, so for the most important is this provident fund that we will take up next time. Then I will take up. He will pay provident fund, ESI, then NPS. If NPS is optional, if both pay, both will pay. Otherwise, if it is not deducted from the employee, it will not be paid by the employee. It is optional. And the other one is employer's ESI. But this what we call professional tax is paid only by the employee. Okay. Now we will calculate employer's ESI contribution. Employer's contribution. What is the amount to be contributed by the employers towards the ESI? I told you, employee, the deduction will be made from the employee only 0.75%. Balance 3.25%. That is for total 4%. 3.25% is to be contributed by the employer. Okay. And now here, it is not earning to the employee. It is not earning to the employee, not paid to the employee. It is not paid to the employee or not deducted from the employee. This is contributed by the employer under the rule. So that's called as employee. See, employees statutory deduction, deducting from salary. Here, employees statutory obligation to contribute. So it's called as employer's statutory obligation, that is statutory contribution. So it is taken as employer's statutory calculation, statutory contribution. And what is that? Employee state insurance. So ESI. So separate head is there. Employee state insurance, and it is also expenses to him. Direct expense, income expenses. It will not affect. See, deductions, payheads, earnings will affect the net salary. Deductions will affect the net salary. This employer contribution will be paid to government, not to the employee. So it will not affect the. All these employer contributions will not affect the net salary. Okay, and it's already it will be computed. Directly it's going to, by default, it is computed value in months. It is directly going to normal rounding. And here, how the ESI is contributed. See here, employer for employee also, we have taken basic pay, add, then earners allowance, add, then their bonus is not taken. Conveyance allowance, then add, and add house rent allowance, and add, then add overtime, and then so overtime, then variable pay, we will not take that variable pay, it will be paid or not. So okay, so with this we will end this. So here, and the 1st May 23, and here the percentage is 3.25%. For employee it is 0.75. For employer contribution is 3.25%. Okay, so this is over. And the employers NPS, so same thing. Employers NPS contribution. This actually NPS, you can make it tier 1, or is not necessary. Tier 1 contribution at the rate of 10%. Employer 10%, employee also 10%. And it is also called as deduction, subscription or contribution by the employer. So employers statutory contribution, and it is a separate head we have taken. See here, tier 1 we have paid to them Here also you have to pay tier 1. Okay. Tier 1. And it is also indirect expense to the employee. Indirect expense, it will not affect the salary, shown in the display in the pay slip. And then here also, this is to be calculated. So months, I'm going to normal rounding, limit 1, and here computed value, that is specified formula. I told you already, when you are deducting from the employee also, only basic and then DNS allowance. Basic means basic plus DNS allowance. DNS only these two, and 1st May 23, and there is no limit of the salary, and here percentage will be 10%. Percentage will be 10%. Okay. So these are the two, that is NPS and ESI. NPS, ESI and NPS. But for professional tax, there is no contribution by the employer. And now the employees, this is provident fund. That is to be carefully noted. To be very careful. Here, employer, see, the provident fund is deducted at the rate of 12% from the employer. That is 12% is deducted from the 12% is deducted from the employee. So 12% is deducted from the employee, and the employer also has to contribute 12%. He also contribute 12%, but here he will contribute 12%, but not the total 12% will not be contributed to the provident fund. Employees 12% is paid to the provident fund. Provident fund account number 1. But employer contribution will not be made, or total 12% will not be made to the provident fund. Out of that, there is another thing in the provident fund. I told you, national pension scheme by the central government. Similarly, in the provident fund also, there is pension scheme. It is called as EPS. That is employees pension scheme. So in this employees pension scheme, they will contribute 8.33%. That is all percentage. So this is 12% is the total amount. Out of that, here 8.33% is contributed to EPS, employees provident pension scheme, is amount is 8.33%, and the balance only to the EPF. So total 12% will not be contributed to EPF. So balance is 3.67% is the contribution to the EPF. Total will be 12. See, take this total. 8 plus 3, 11 plus 33, 61 is 12%. So this is the contribution by the employer. Not total 12%, not contributed to EPS. So we have to make these two deductions separately. So thing is, employers EPS contribution. EPS contribution at the rate of 8.33%. At the rate of 8.33%. So it is also employers statutory contribution. So employers statutory contribution. What is the amount? Is the EPS contribution. So it is called as EPS account number 10. EPS account number 10. EPS account number 10. Okay. So EPS account number 10. And it is also indirect expense to him, to the employer. It will not affect the salary, and it is to be computed. Rounding, normal rounding, limit is 1. Here also we have to calculate this specified formula. And here also, see, in the provident fund, for all the provident fund deductions or contributions, only basic means basic plus DA. So we take, so when you are calculating the employee's deduction, the employer 8.33%, and everything will be this one only. So basic pay, add pay head, then DNS allowance. Only these two we have to take 1523. Okay. And see here also for provident fund, there is a limit of 15,000. So deducting from the employee is 12% limited to 15,000. But the employer also will contribute 12% in two segments, but total will be limited to 15,000. Up to 15,000, the percentage is 8.33%. Above 15,000, it is the value amount. So here, See, for 15,000, the amount is 8.33%. That is, sorry, for 15,000 into 8.33% into 8.33% is 1,249.50. So in the case of ESI, in the case of Provident Fund, this will be rounded up to the downward rounding. That's why it will take as 1,249. Okay, only 1,249 is the amount up to 15,000. So if the salary is above 15,000, it is limited to 1,249, not 1,800 is the total 12%. Out of the 8.33% means 1,000, the value amount is 1,249. 1,249, we can make it as 1,249.50 we can make, but it is to be rounded off. So 1,249 is the limit. So up to 15,000, 8.33% is 12,000, 5,000, 10,000, 12,000, 11,000, 8.33%. If it is more than 15,000, the maximum limit is 1,249. That is 8.33 of 15,000. Okay. The next one you must be very careful. Okay. Employers EPS contribution. So balance 3.67% is payable. 3.67% is payable. The difference payable to EPF. Balance only will be paid to EPF. So employers EPF contribution. EPF contribution at the rate of 3.67%. Okay, here it comes there. The head is, it is also employers statutory contribution. The account is Provident Fund, PF account number 1 only. It is also indirect expenses. It will not affect the salary. It is to be computed. So normal rounding 1. Here, you must be very careful. We are going to specified formula. But here, you can take again the basic pay and dearness allowance, and you can take the amount at the rate of up to 15,000. You can take 3.61%. Above 15,000, the balance, in the value amount you can take. But as per the Provident Fund Act, it is not calculated in that way. That is how it is calculated is total amount is 12%. Out of that, 8.33% is contributed to, National Pension Scheme. That is not National Pension Scheme. EPF, Employees Pension Scheme, it is counted. So the balance only without calculating 3.66%. So the balance, whatever it may be, the balance will be for the Provident Fund. That's why what we have to do is we have to take, see in the different way, not other way. Employee deduction is 12%. Employees EPF deduction 12%. Okay. Employees EPS deduction is 12%. And then out of that, employers contribution 8.33% to the employees provident scheme, employees pension scheme. That is to be deducted. The balance will be paid towards the employees provident fund. So here, don't add the post. Subtract the pay head. So here, from this 12% employees deduction, from this employers contribution to EPS, the 8.33%. This is to be deducted. So if we deduct that, so here 1,523, and here there is no limit. So here, if we deduct that, here the percentage will be how much? Not the, here you must be very careful. Many people do blunders here. Here they will take 3.67%. No. See, the deduction what we did, employers EP of 12%. From that, minus 8.3%. Balance amount, total amount, the balance, whatever it means. The balance is 3.67%. That means it is 10%. The balance is 10%. The balance totally it is 3.67%. So you have to take it as percentage, this one 100% of the balance. If you take the basic plus DA, in that up to 15,000 rupees, 3.67%, and above 6,000, value amount, so it comes around to 551 rupees. 1,249, 1,800 minus 1,249 there means 551 rupees. So here, as per the Act, it is to be calculated in this way. Employees deduction 12% reduced by the employer's EPS contribution of 8.33%. The balance is the amount payable. Balance is the total. Balance is the amount payable to the employees provident fund. So like this, you have to take, you must be very careful. So that's, so like this, we have made. So we have made all the deduction in contributions. So payheads, earning payheads we completed yesterday. In this part, so deductions, general deductions and statutory deductions we completed. And then employees contribution payheads also we created. Okay. So this is all the thing we did. So you can go and see that. If you go to, that is the order button. If you go to payheads button, go to payheads, see here, all this. So earning payheads are given and employees deductions are shown. Employees deductions are shown. So there are 3 deductions for employee. And the employers deductions will be, employers contribution will be 4, because PF is only 1 in the case of employee deduction, but for the employer he will deduct 2 amounts. One is he will contribute some amount 8.33% towards EPS and balance 3.67% to EPF. So that's why he's given 4. One employer will have 4. 1, 2, 3, 4. The employee will have only 3. 1, 2, 3. So 3. These are the contributions, everything made. So with this, so our calculation is creating all the masters. We created all the masters. That is payheads, all the other things. Employees vertical. We completed employee category, employee group, employees units, production type and attendance, and then payments. I mean, payheads means earning payheads as well as deductions as well as contributions. Everything we completed. Okay. So up to this is one. This is the part. The next part we will take up the balance. Next part is very simple. Okay. So this, I'm completing this. And here, after this, what we have to do is, after this, what we have to do is, so everything is, all the payheads and all the masters are created. Now we have to give what are the amounts payable to the employee. Salary structure. We have to show the salary structure, showing or creating the salary structure. What is the amount paid towards which head? So what is the basic? What is the other items? So defining, I mean, showing the payments to be made to the employee, the salary structure is called defining salary. We have to define the salary. So we have to define the salary. What is the amount payable to the employee? And others, these percentages, specified formula, automatically the system will calculate. Okay. And then what we have to do is, after defining the salary, how much the total amount will not be paid to the employee. It will be paid to the employee as per his work. What is the work? So if he is present only for half the month, all the payments will be made, only 50% will be made. Like that. The next step is, after defining the salary, we have to process the attendance. How much, what is the present days, what are the present days, and what is the overtime done. So these things are called attendance process. So we have to process the attendance. So this is the amount payable to him towards for the work done. That is attendance. Attendance process you have to pay, and then process the salary. So the amount payable to them as per the work done, as per the attendance, it will calculate the salary. It will calculate the salary, and it will show all the different heads, and it will calculate all the heads, and it will show the salary. But before processing the salary, so if salary is defined, the pay structure is defined, salary structure, then attendance is processed, and then we have to process the salary. But before processing the salary, see, in the case of, so in the case of payheads, in the case of payheads, in these payheads, all the items are what is given, the amounts are given fixed amounts, like that, fixed, variable, and all these things. But in some cases, it is given as, you see here, canteen deduction, that is deduction. Okay, bonus. See, in the bonus, it is given as defined value. What is the bonus? User defined. And similarly, see, canteen deduction, how much is to be deducted from for the canteen expenses? That is, see, user defined. And conveyance allowance and all this, okay. Gratuity, that is calculated already. Income tax, that is as per income tax slabs, it will deduct. And medical expenses means medical reimbursement. What is the amount reimbursed? See, it's not fixed. So here also, as user defined, if there is reimbursement, what is the amount to be given? As a user defined. Over time, what is the rate that is on production, we will give the rate that we have to give that production. That is, when you are processing the salary, we will give the number. Before that, you give the rate per, when you are giving the salary structure or salary defining salary, you give the what is the rate per hour for the overtime. So the what is the work done, what is the how many hours worked overtime, that will be shown in attendance processing. So that is it. And the professional tax, okay. Variable pay means it is fixed, not fixed, because it is variable. Sometimes we give them different bonuses or not bonus, different gifts or different incentives. All this will be given. They are not fixed. They are not given to everyone. It will not be given to some people only. And also it is not fixed. So these things are called as user defined values. So are they are called as totally canteen deduction, bonus, canteen deduction, bonus, medical allowance, and variable pay, medical expenses and variable pay. These four are user defined. That means we have to give. So before processing the salary, we have to process the user defined values. When you are giving the salary structure, we cannot give the fixed rate means we can give. The user defined means at that processing the salary, that is when you are defining the salary, we cannot give. So it will not take. So before processing the salary, define salary, process attendance, then after processing attendance, we have to show the, after processing attendance, we have to process the salary. Before processing the salary, we have to process the user defined values. You have to give that type. We have to give that, and then after that we have to process the salary. It will show what is the amount then, and other thing. After that, we have to process all the statutory payments of the employees deductions to be paid to government. They are processed in the salary itself. Employers share their contribution, that will be processed. So process salary, process all the employer contributions towards all these we have to process, and then employee salary will be paid, and all the contributions plus employees deductions, these amounts will be paid to government in the next month before 15th. Before 15th, you have to pay the money and you have to file the return for all the contributions and all the statutory obligations. So that will be done. With that, we will get generated. So tomorrow we will take up the next part. We will take up the this close taking. So in the next part, yes, tomorrow we will take up. In the next part, we will take up this one, what we call processing the defining the salary, attendance, processing user different values, processing salary. All this will be taken in the next part. Okay. With this, today's session is closed. And so I think you follow that. If you are not understanding anything, pause the video again or again, see the video again and again, and you practice it. There are some problems given in the notes. I will give that also. You can see the notes, and as well as some other problems also I will show you. You can pause the video and you can practice. If you practice more and more, then you will get very easily, you will get the subject. Okay. So I wish you all the best. So I wish all you become expert accountants with the expert knowledge. And thank you. And bye. Meet in the next video. Bye.